right? So these things are being done along. I'll just start recording the session also so that nothing gets wasted. Right. So all these things are in line, right? So the quality of the questions that you ask, I'll be discussing the question in the live session also. And the answer to that specific question is something which the other people can also take benefit from. Right. So that is something we need to be very much cognizant about. Right. So everything is being updated on the website, latest updated modules and recordings. Just go order wise. Start from the very first module and go order wise. Right. So in the previous session, we talked about the price to earning ratio, right? And I tried to decode this price to earning ratio in a very deep dive way, right? I tried to establish the relationship of the price to earning ratio with the interest rate, risk, and growth. And also, we talked about the advantages as well as the disadvantages of the price to earning ratio. And in which sectors specifically the price to earning ratio is used, and in which sectors you cannot use the price to earning ratio. So all these things we talked about, right? Price to earning growth ratio, right? We discussed about the price earning growth ratio, the PEG ratio also. And this PEG ratio was trying to overcome the limitation of the price to earning ratio. We talked about this limitation. If still you want to understand about this, right, please watch the previous recordings. Just go otherwise. You'll be understanding these ratios to deep dive. But just to give you a simple reference, right, just to set the tone, in a price to earning ratio, in the numerator, you have the current market price of the share. And in the denominator, you're having the EPS of the company, the earnings per share. The earnings per share is a proxy for profit, right? But the drawback of the price to earning ratio is that in the denominator, you are just using 1 year's price to earning ratio, 1 year's EPS. That's it. That is what just indicating to the investors or to the person who is using this price to earning ratio or applying this price to earning ratio for his personal analysis for stock picking. He's just taking into account only 1 year's profit, EPS of a company. But we also know as a student of finance, as a student of asset management, the past performance doesn't always indicate the future performance. The past performance doesn't always indicate the future performance, right? So past EPS or past profitability will not always indicate that the profitability will be of same quantum or same rate, right? So for example, if the profitability of the company had been really good in the previous year, it doesn't mean that the profitability of the company will be good in this year also. And the vice versa can also take place. That is, if the profitability of the company has been dull, has been timid in the previous quarter or the previous month, it doesn't mean that the profitability of the company will be as weak as in the previous year or quarter or month. It can come back to performance. It might happen that the lower profits have bottomed out, right? And the new cycle of enlarged profits or positive profits will start to kick in, correct? So all these things can come up. And that is why a price to earning ratio lacks into this aspect because the past performance doesn't always indicate the future performance. And as a result, we talk about the price earning growth ratio because we also talked about the price earning growth ratio from the formula perspective. I won't be going deep dive, but again, just to set the tone before we go further, in the price earning growth ratio, you are taking the price to earning, the whole metric that we calculated before in terms of price to earning in the numerator, and in the denominator, that is below the price to earning a metric, you are taking the EPS growth rate. The EPS growth rate. Now, here the difference is in the price to earning metric, right? Or the price to earning multiple. We were just taking last year's EPS, that constant number, that absolute number, last year's EPS. But here in the price earning growth ratio, in denominator part, we are taking the growth rate in EPS. Maybe an average 5 year growth rate CAGR of EPS, right? Because usually it's better to take an average 5 year ka number. Because even a past 2 years ka number can manipulate it. It might happen that the company has been doing really good in the past 2 years, and now the profits have topped out. By topped out, I mean the profits will not grow further. The profits will decline, or there might be a consolidation. What do I mean by consolidation? That is, neither the profits will rise nor fall. They will neither fall nor rise, right? So that's the logic of consolidation. The same can happen in terms of stock prices in secondary market, where we tend to buy and sell the stocks, and can also happen in terms of individual line items of the profit and loss statement per se. Correct. So यही मैंने बात करी थी that even if we take a past 5 year CAGR EPS, if as of today I want to calculate the price earning growth rate for a company, right? So I can take the EPS as of 31st March 2025 and as of 31st March 2020. And simply I can take the CAGR of that EPS, right? And we talked about this formula also specifically. For those of you who might assume that I'm running fast and I'm trying to wind up this price earning growth ratio very quickly, it is just because I'm giving you a revision. We talked about both the price to earning and price earning growth ratio in a full-fledged 1 hour session, deep dive, right? So I've taken the 2025 ka EPS. These are hypothetical numbers just to make you understand. So once you start doing the financial modeling and valuation, then like you shall be working with the real numbers. 2020 ka EPS to the power of 1 by 5 minus 1. And why 1 by 5? It's the formula 1 by n. So CAGR ka your compounded annual growth rate, which takes into account the compounding effect of any metric. And the formula basically states the final value divided by the initial value to the power of 1 by a time period, 1 by n minus 1. So we'll be taking the 2025's EPS divided by 2020's EPS whole to the power of 1 by 5 minus 1. And we, as the students of finance, we as financial analysts, need not even calculate EPS manually. It is available in the annual report of a company. It is available on different social media platforms like Money Control, Value Reserve, Screener. You also get on the Bloomberg, right? Because mostly companies like they tend to use the Bloomberg, or either they tend to link their Excel files with Capital IQ. And all these softwares or external tools tend to throw out these numbers to you free of cost, for you at least, because the company has taken the subscription for that. Correct? So that is the thing. A major essence as a student of asset management, as a student of investment banking or financial modeling and valuation or an equity research guy is to analyze these numbers, to know how these are calculated, to interpret these numbers or to communicate the results of these numbers to the final audience, to the final investors. And so that's what task is. Now, when we talked about the price to earning ratio, we talked about how does the price to earning ratio work with interest rate, risk, and growth. What exactly is the relationship of the price to earning ratio with the interest rate, risk, and growth? With interest rates, it exhibits an inverse relationship usually, but not always. That is, if the interest rates rises, the price to earning tends to fall. We talked about the logic also, right, in the previous session to watch the recordings. Risk, when there is higher risk, the price to earning also comes down. Again, an inverse relationship. But whenever the company is a high growth company or the expectation of growth is high, but EPS will, your price to earning will also be high. So your price to earning generally exhibits an inverse relationship with the interest rates and risk, but a positive relationship with the growth. But if I talk about the price earning growth ratio, the PEG ratio, and I talk about the relationship of the price earning growth ratio with the interest rate, again, same as price to earning ratio, it is a negative relationship or an inverse relationship. And that is when the interest rates are rising in the market, the price earning growth ratio tends to fall. Why? The logic has been discussed in the previous session. Same logic as price to earning. एक बार देख लेना, कोई doubt होता है, then ask me. Right? Risk के साथ भी again it's a negative relationship that whenever the risk in the market is high, the risk can be on account of multiple factors, internal factors, some micro factors, some macro factors. There can be some geopolitical tensions. There can be some depression. There can be some black swan events. There can be inversion of yield curve. That different things can be there which can increase the riskiness in the economy. The current risk, as we can see, is tariff risk, right? Earlier, there was a risk of inflation, right? There was a balance out or a kind of a trade-off that the people had to make between controlling inflation or stimulating growth, because inflation was very high and growth was too low till the previous year, right? But from this year onwards, this fiscal year onwards, the growth has started to rise back once again, right? And the inflation is under control. The recent CPI print in India, right, was 1.25%, right? It was too low, like 1.2% का number था, like CPI number, right? WPI, the wholesale inflation was negative 1.2%, like 1.1%, right? Your GDP growth rate, we recently had the GDP growth rate number of the first quarter of the FY26, राइट मार्च टू जून का हमारे पास अप्रैल टू जून का फर्स्ट क्वार्टर का हमारे पास नंबर आ गया है फॉर जीडीपी राइट हाउ मच इज दैट नंबर एनीवन कैन टेल इन द चैट बॉक्स एनीबडी Correct. It's 7.8%. Absolutely bang on. Right? So 7.8% का number आया है. Again, GVA, that's the gross value added. It's also 7.6%. So GDP 7.8. Again, both are closer metrics, which tend to tell you about the total market value of the goods and services produced in the economy, taking into account investment, consumptions, government expenditure, and net exports. So all these numbers have been on a high, right? So 7.8% का number आया है. In the previous quarter, you had 7.2, 7.3% का number. Again, very high number. Correct. So all these things are something which stimulate India's growth, right? But if we talk about specifically the growth metric, how is the growth metric linked to the price earning growth ratio? How is the growth metric linked to the price earning growth ratio? So growth metric, it represents an inverse U relationship. With the price to earning ratio, it was a simply positive relationship. Higher growth, high would be the price to earning ratio. But in terms of price earning growth ratio, the growth factor, the third factor, the growth factor, it tends to exhibit an inverse U relationship. Inverse U, right? So what do I mean by this inverse U relationship? That is initially when the growth in the market is very high. Inverse U relationship. That is initially when the growth in the market is really high, your PEG will rise. When the growth in the market is really high, your PEG will rise. It will reach to a saturation point. It will reach to an inflection point, and after that, the PEG will start to fall. And after that, the PEG will start to fall, right? And that is something that we want. Out of our previous discussions that we had the previous week, we wanted the PEG to be low, right? We wanted the PEG to be less than 1 or less than 2, or maybe like closer to 1.5, 1.6. At least we wanted that PEG. So initially, what will happen when the PE is very high, the growth is very high, your PEG might also be very high, right? जब बहुत अच्छा PEG market का होगा, might happen that the PEG is also very high, but there has to be a point of saturation. And this point of saturation is something which is not bad, it is good, because we ultimately want the PEG to be low. Because if we have a low PEG, conceptually, simple maths, what does that indicate? Let's go back to the formula of PEG. PEG का formula is price to earning in the numerator and the EPS growth rate in the denominator. It is not absolute EPS ka number, it's a percentage number in the denominator. So price to earning in the numerator and EPS growth rate in the denominator. It means your EPS is rising. The growth rate of EPS has risen. And simple maths, your denominator has become a larger number now. And as a result, your peg is falling. And as a result, your peg is falling. And the same has happened with Nifty 50 now, or the Nifty 500. If you see the Nifty 500 ka peg from 2, it has fallen down to 1.8 to 1.88, right, to be precise. And that indicates a very good picture because anyways, सारे stocks जो भी market में थे, especially towards the mid cap and the small cap space, the price to earnings were really high. Their price to earnings were really, really, really high. They were into a bubble territory. Even after the correction from September 24 onwards, we witnessed a 6-month, 5-month correction. The market fell from like 15% to 30% की range में. For large cap, it was around like 15 to 60%. For mid cap, like it was around like 20% odd. And for small cap, between like 25 to 30%. Even after the correction, they again bounced back and reached closer to all times high. Not all time high, but closer to all time high. The price to earning again became very high. They almost reached towards that bubble territory. Closer to that September 24 में जो इनका PE था वो सेम लेवल पर पहुंच गया, right? But the thing is, their PEG again was high, but much better than the price to earning. But there were many stocks, more than 50 to 60% of the stocks, which had a higher PEG also, more than 2, more than 3, right? But since as of now, we can see at an index level, because if we talk about the mid cap stocks or small cap stocks, all these stocks are part of the Nifty 500 index. अगर हम मिड कैप स्टॉक्स की बात करें, हम स्मॉल कैप स्टॉक्स की बात करें, all these are a part of Nifty 500 index. Yes or no? Because in the Nifty 500 index, you have the Nifty 100, 500 में you have the top 100 companies, the Nifty 50 plus the Nifty next 50, top 100 companies. From for 100, right, to 250, you have the mid cap companies. So total 150 companies or 150 companies you have in the mid cap space. That is from 101 to 250. From 251 to 500, that is a set of 250 companies. You have small cap companies. So Nifty 500 comprises of Nifty 50 also, Nifty Next 50 also, Nifty 150 mid cap also, Nifty 250 small cap also. And that makes the total Nifty 500. So if on a benchmark level, the PEG is coming down from 2.2 to 1.88 to 1.85, that's really good. And that will get translated to the stocks as well. Those stocks tend to decide the valuations of the benchmark. Stocks tend to decide the valuation of the benchmark. Benchmark का number is dependent upon the stocks. Stocks का number is not dependent upon the benchmark. राइट अगर किसी भी बेंचमार्क में अगर मैं निफ्टी 50 की भी बात करूं विद इन द निफ्टी 50 टाटा इज डूइंग वेल एचडीएफसी इज डूइंग वेल टीसीएस इज डूइंग वेल इन्फोसिस इज डूइंग वेल companies like ICICI is doing well or Reliance is doing well. So all these companies have largest weightage in Nifty 50, right? If, for example, the PE or the PEG of these companies is coming down, anyways, it will impact the index ka PEG also. The impact of these top 10, 20 companies will have a major impact upon the index ka PEG also, right? And the same is happening with the Nifty 500 also. Agar Nifty 500 ka PEG has fallen from 2.2, 2.1 to 1.85, 1.88, it means the higher weightage companies जितनी भी थी अपनी Nifty 500 में, there might be a few companies from the Nifty 100 space. There will be definitely some companies from Nifty mid cap space. There will definitely be some companies from the Nifty small cap space. तो इनका PEG कम हो रहा है. It means the growth rate is sufficiently good. And that is something that we want in the market. Correct? So PEG का usually growth rate के साथ एक inverse U का relationship रहता है. It's an inverse U relationship with the PEG ratio. And that relationship is something that is very important to understand. Any question, anybody, as of now? And this PG can be used for the any sector. ठीक है इसको आराम से यूज करो. Anybody else? And anybody has any question? Sir, why it exhibits an inverse U relationship? See, it exhibits an inverse U relationship because see, one thing is there have been like multiple studies from the previous 100 years, 200 years, like which have been done, and this has happened always. Now the question that might come into place: what happened in the past might not happen in the future. Correct? As we have been talking about in the case of price to earning. But if we try to understand this logically also, if the earnings are rising, if the earnings are sustainable, right? At a point of time, your price to earning will also fall. अगर मैं पीईजी रेशियो की बात कर रहा हूँ मैं अगर पीईजी रेशियो की बात कर रहा हूँ इसके न्यूमरेटर में यू हैव प्राइस टू अर्निंग एंड प्राइस टू अर्निंग हम कैसे करते हैं कैलकुलेट इट इज द करंट मार्केट प्राइस divided by the EPS. If the EPS is really very strong, the earning is very strong, anyways your price to earning will also come down. Simple maths. Denominator is larger than numerator. Simple maths, right? So the ratio will also come down. Correct. तो अगर प्राइस टू अर्निंग छोटा नंबर बनता जा रहा है and that छोटा number is a part of your numerator, but the earning growth rate is stagnant, it is sustainable or it is even increasing, anyways your peg will come down. Correct? So that also exhibits a relationship, an inverse U relationship with the price to earning ratio. I hope that answers your query. Any question, anybody else? If no other question, we'll just do like one more last ratio, that's price to book. And after that, we can wind up the session. Okay. Up there is a ratio which is called as price to book, right? So price to book ka, again, if we talk about from a formula perspective, all these ratios are mentioned in this tab, right? So you won't be forgetting this. And again, if you forget these ratios conceptually, you have the recordings, right? तो इसको देख लेना. So price to book में again you have the current market price in the numerator. Same logic as price to earning. There is no change in numerator in case of price to earning or price to book. But denominator में change है. In denominator you have the book value per share. You have the book value per share. So as we talked about the price to earning ratio में, this figure was EPS. And EPS again was a derived number. It was a calculated number, right? And how did we calculate EPS? Profit after tax divided by the outstanding shares. Formula था. Similarly, for the book value per share, right, we have to calculate the book value per share. That's nothing but it's the book value of a business divided by the outstanding shares. The book value of a business divided by the outstanding shares, right? How do we calculate the book value of a business? How do we calculate the book value of a business? Simple logic. It is the total assets of a business minus total liabilities. Total assets minus total liabilities. So if you go to the balance sheet of a company, you take the sum of the total assets, jitni bhi total assets hain, right? Both the current assets as well as the non-current assets. You take the sum of the total assets, correct? And on the other hand, you take the sum of the total liabilities, be it the current liabilities or non-current liabilities, take the sum of total liabilities. Subtract the total liabilities from total assets. So once you subtract the total liabilities from total assets, you get the book value of a company, right? So that is the book value. Simple logic. Book value is also called as shareholder funds, right? Because if we talk about the book value from an accounting perspective, right? अकाउंटिंग का जो भी यहाँ पे कॉमर्स के स्टूडेंट्स हैं, अकाउंटिंग के फर्स्ट सेशन में, वेरी फर्स्ट सेशन लाइक इन अकाउंटिंग इन योर क्लास 12th क्लास 11 बीबीए बीकॉम, it is taught to you that assets is equal to liabilities plus capital. Assets is equal to liabilities plus capital. It is also called as a balance sheet equation. It is also called as a balance sheet equation, right? That the sum of your total assets will be equal to the sum of total liabilities plus the capital deployed in the business or the owner's funds. बात एक ही है, right? So अगर हम assets minus liabilities कर रहे हैं, if you bring this liabilities here, simple maths, it is simply your capital or the owner's fund or shareholder's fund. So book value is also equivalent to or equal to the shareholder capital or the shareholder's funds or the owner's capital. So even if we take the shareholder funds ka total from balance sheet, it is same, right? In shareholder funds, you have the equity capital plus the preference shares plus some reserves and surplus, right? Again, that is your book value, right? And here, this book value per share, we take here and we calculate the price to book ratio. It's not a ratio, it's a multiple. Price to earning, PEG, PB, all these are multiples. ये ratios नहीं है. Ratios are your current ratio, quick ratio, debt to equity ratio. All those are not multiples. Valuation में जितने भी metrics we are using, all those are multiples and not ratios. And so this thing is something that we should know. The bifurcation or a clear cut demarcation between the two. कि कब ratio है, कब metric है. Right? And similarly हम price to book value निकाल सकते हैं. Again, the same logic as price to earning. You have to compare your company with a similar company in the same industry only to get to know that whether your company is overvalued or undervalued based upon the price to book. ठीक है? You cannot compare Tata Motors with TCS. You cannot compare Mahindra and Mahindra with HUL. But you can compare HUL with ITC and Marico. You can compare TCS with Infosys or Wipro or Mindtree, right? So the basic principle of finance or valuation is consistency in the principle of relative valuation. That is, if your target company should be analyzed in conjunction with the other company in the same sector only to have a realistic comparison, correct? And you have to see averages. अगर मेरी कंपनी का आज का प्राइस टू बुक वैल्यू इज 20, आई विल सी उस सेक्टर का, उस इंडस्ट्री का पास 5 ईयर का प्राइस टू बुक कितना रहा है, राइट? मैं 10 ईयर तो नहीं बोलूंगा बिकॉज 10 ईयर इज समथिंग विच इज आउट ऑफ द कॉन्टेक्स्ट नाउ. The market has changed over these 3, 4, 5 years now. The multiples have expanded. The average multiples have also increased. Correct? So past 5 year में का price to earning मेरा 20 से कम रहा है. I'm giving you just a kind of hypothetical example. But if my target company on which I'm doing research, उसका price to book value is 20, but उसी sector industry का price to book value had been 10, I can assume that my company is overvalued. But अगर मेरा 5 या 4 है, I can say my company is undervalued. But again, different amount of metrics also I need to see. And that we talked about the price to earning that remains same in case of price to book value. Correct. और जो ये बुक वैल्यू है ना, बुक वैल्यू इज नॉट सेम एज कैरिंग वैल्यू, राइट? एक कॉन्सेप्ट होता है फाइनेंस में कैरिंग वैल्यू, CARRYING, कैरिंग वैल्यू, ये सेम नहीं है. मेनी पीपल इन द मार्केट आर यूजिंग बुक वैल्यू एंड कैरिंग वैल्यू टू बी सेम. ये सेम नहीं है, कतई सेम नहीं है. कैरिंग वैल्यू इज नथिंग बट द टोटल वैल्यू ऑफ योर एसेट्स माइनस डेप्रिसिएशन. द टोटल वैल्यू ऑफ द एसेट्स माइनस योर डेप्रिसिएशन इज योर कैरिंग वैल्यू. तो ये बुक वैल्यू में हम डेप्रिसिएशन माइनस नहीं कर रहे, इट इज एसेट्स माइनस लाइबिलिटीज, टोटल एसेट्स माइनस टोटल लाइबिलिटीज. Correct? So carrying value is more of an accounting concept. Book value is an accounting plus a financial concept. Correct? And book value per share हम सब इंडस्ट्रीज के लिए यूज कर सकते हैं. ऐसे प्राइस टू अर्निंग लाइक वी कुड ओनली यूज फॉर द एसेट लाइट इंडस्ट्रीज लाइक IT, राइट, और टेक बिजनेसेस. बट प्राइस टू बुक वैल्यू वी कैन यूज फॉर एनी इंडस्ट्री. स्पेशली फॉर हेवी इंडस्ट्रीज प्राइस टू बुक वैल्यू ही यूज करो, प्राइस टू अर्निंग मत करना, राइट? Also for banking space, BFSI space, public sector banks, private sector banks, NBFCs, insurance, use price to book value. Never price to earning. Never use price to earning ratio for banks. Never ever use price to earning ratio for banks. Correct? Also, हमको ना जितनी भी सब हेवी इंडस्ट्रियल कंपनीज होती हैं, राइट, जितनी भी हेवी इंडस्ट्रियल कंपनीज यू हैव, बीट सीमेंट, बीट इंफ्रास्ट्रक्चर, डिफेंस, कैपिटल गुड्स, right, telecom, correct, though you have a separate metric for them as EV to EBITDA for cement, right, and telecom businesses, but in general for heavy industries जिनके पास assets बहुत हैं, right, price to book should be used mandatorily. Their price to earning cannot be used. Why? Because usually what happens, see, अगर हम किसी भी साइक्लिकल इंडस्ट्री के लिए, हेवी इंडस्ट्री के लिए प्राइस टू अर्निंग यूज कर रहे हैं, राइट, आर प्रोसेस ऑफ सिलेक्टिंग दैट स्टॉक कैन बी रॉन्ग. there's a huge chance हम सही भी हो सकते हैं, right, but the probability of making a wronger choice is high. How? As a basic principle of valuation we say कि purchase a company when the price to earning is low and sell when the price to earning is high. I'm keeping other factors in I would say barring, right? So like citrus baribus, I would say I'm just trying to keep the other factors in isolation. मैं दूसरे फैक्टर्स को एज ऑफ दिस पर्टिकुलर पॉइंट में अभी कंसिडर ही नहीं कर रहा. तो बाकी फैक्टर्स हम देखते हैं, ग्रोथ कंपनी की कितनी है, कितनी प्रोजेक्शंस हैं, डिफरेंट थिंग्स. बट एज ऑफ नाउ यूजुअली वी टेंड टू से दैट इफ द प्राइस टू अर्निंग ऑफ अ कंपनी इज लो, बाय दैट स्टॉक. इफ द प्राइस टू अर्निंग इज हाई, यू कैन थिंक ऑफ सेलिंग दैट स्टॉक, राइट? All those kind of analysis can be made, but that won't work in case of cyclical companies like defense, cement, infrastructure, metals, right? It might not work for them because usually what happens, the basic rule for those type of companies, for heavy companies, is buy those companies when the price to earning is high. For heavy companies, I'm saying the logic gets reversed, the logic gets interchanged, right? We say for heavy industrial companies only, this logic or this line which I'm stating right now only works for heavy industrial companies, real estate, metals, infrastructure, capital goods, telecom, defense, especially because आज का theme है defense. Like people talk about defense nowadays on daily basis. Correct? The principle of price to earning reverses. We say that buy when the price to earning is high and sell when the price to earning is low. Buy when the price to earning is high and sell when the price to earning is low. Now, I relate this factor to price to book. For heavy industrial companies only, जब आपका price to earning high होगा, most probably in more than 90% of the cases, your price to book value will be low. And when your price to earning will be low, your price to book value will be high. But हमने क्या सीखा है? For heavy industrial companies, we always have to focus upon price to book and price to earning. देखना ही नहीं है. देखेंगे तो हम गलत है. Because what usually happens, why are we saying that buy the heavy industrial companies or cyclical businesses when the price to earning is high? They are saying this simple logic, price to earning high कब होगा? When earnings are very low, EPS is very low, denominator is very low, and the price is very high, and the valuations aren't being justified based upon price to earning basis. But these companies are cyclical businesses. they have a long gestation period. And what do I mean by gestation period? It takes time to convert the revenues to profitability. It takes time for them to convert their orders, their pipelines into actual revenues, into top line. And the top line getting converted to actual bottom line. Top line say I mean by the revenue of a company, and bottom line say I mean by the profit after tax, PAT, right? So in companies में initially when the business starts to come back, देखो ये क्या है ना, मतलब कि साइक्लिकल बिजनेसेस हैं. दे विल वर्क फॉर 7-8 years, ठीक है, लाइक इन्वेस्टर्स विल अर्न अ लॉट, एंड फॉर लाइक 2-3 years, लाइक दीज बिजनेसेस माइट बिकम डम्प, राइट. अच्छा परफॉर्म नहीं करेंगे, इनके प्रॉफिट्स गिर जाएंगे, राइट, इनके मार्जिन गिर जाएंगे, इनका टॉप लाइन इतना स्ट्रांग नहीं होगा, राइट. बट जो 7-8 years का इनका साइकिल रहता है ना, सो व्हेन दिस साइकिल इज अबाउट टू बिगिन, when this cycle is about to begin, their earnings will be low, right? That's a common sense. Q, because now they're getting orders. That pipeline is coming up, right? That pipeline, they will build up orders that will get translated to revenue, to top line, and it will flow down to bottom line. Correct? So initially इनकी अर्निंग कम होगी, एंड उसी टाइम पे हमें उन कंपनीज को खरीदना है. उसी टाइम ही हमें उन्हें उन कंपनीज को खरीदना है, बिकॉज अब इनके ऑर्डर्स आ रहे होंगे. All those news and positive sentiments about these companies will be in the markets. They will say the companies are really high based upon price to earning, overvalued है, earnings तो है नहीं, but orders तो हैं. It will get translated to earnings later. It will get translated to earnings later, right? But in this case, when the price to earnings really high, your price to book will be low. Your price to book will be low. Why? Because these companies are deploying huge assets. उन कंपनीज की बुक वैल्यू क्या है? उनके एसेट्स, प्लांट, मशीनरी, फैक्ट्री, सीमेंट, बोरियां, मेटल, स्टील, राइट, ऑल दीज आर द बुक वैल्यू. करेक्ट. सो वो तो बहुत ज्यादा बढ़ रही है, एंड दैट इज समथिंग दैट वी वांट, एंड बेस्ड अपॉन द बुक वैल्यू ओनली the firm will be able to manufacture goods and services and sell in the market and get revenue and get translated to bottom line. Correct. On the other hand, the mistake that we do, right, people like you and me, right, the retail guys, we buy these companies, we wait when the price to earning will be low, and that is wrong. And when will the price to earning be low for such companies? And the earnings have peaked out. Means earnings are very high and the price is low. Simple maths. It means all the orders have been translated to revenue and flow to the bottom line. The profits are at peak. The profits are at peak. Right? So at that point of time, the cycle is getting over. From there, the companies will start to come down or consolidate, and no one will make money. And तभी price to book value in cases में ज़्यादा होगा. In cases में your price to book value will be more because the orders have been done, plant machinery has been deployed. A plant machinery का like कुछ use ही नहीं है, right? So the book value will decline anyways, right? And the price to book value ratio will be high. In cases में for heavy industrial companies, you only need to look at the price to book value and never price to earning. Also in case of banks, always use price to book value. प्राइस टू अर्निंग हम यूज कर ही नहीं सकते बैंक्स में. क्यों नहीं कर सकते? बिकॉज बैंक की वैल्यूएशन इज बेस्ड ऑन देयर बुक वैल्यू, राइट. बैंक की बुक वैल्यू क्या है? द लोन इट गिव्स एंड द लोन इट टेक्स. बैंक ऑल्सो टेक्स लोन फ्रॉम अदर बैंक्स. बैंक ऑल्सो गिव्स यू लोन. The interest rate at which the bank gives you loan minus the interest rate at which the bank takes loan is the profit for the bank, is the margin for the bank, right? Technically we tend to call it as NIMS, net interest margin. अगर बैंक ने मुझको 8% पे इंटरेस्ट रेट पे लोन दिया है एंड मार्केट से बैंक ने 5% पे वो लोन उठाया है, 8% माइनस 5%, 3%, वो बैंक का मार्जिन है, बैंक का नेट इंटरेस्ट मार्जिन है, राइट. तो बैंक के केसेस में बेसिकली व्हाट इज हैपनिंग, हम इस बुक वैल्यू के बेसिस पे हम बैंक्स की वैल्यूएशन को असेस कर रहे हैं. बुक वैल्यू के बेसिस पर ही बैंक्स के प्रॉफिट्स हैं, बुक वैल्यू के बेसिस पर ही बैंक की वैल्यूएशन है. बिकॉज बैंक अगर लोन देगा नहीं और लेगा नहीं, बैंक कांट वर्क, right? Debt is a raw material for banks. Debt is not a source of financing for banks. And that is why हम बैंक्स में केवल और केवल ROE देखते हैं एंड ROCE कभी नहीं देखते. बैंक्स में we never look at ROCE. For every company, every industry, we look at ROCE. But for the BFSI space, we only look at ROE, the return on equity. Why? Why are we ignoring the debt holders in terms of banks? Because bank के लिए debt is mandatory. For other businesses, for the non-banking financial companies, if they want to finance some new projects, they can raise equity, they can raise debt, they can use some internal accruals, they can use cash. But debt उनके लिए mandatory नहीं है. खुद का पैसा है तो लगा दो। बट बैंक के पास अगर खुद का पैसा भी है, स्टिल बैंक को डेट लेना पड़ेगा। बिकॉज अगर बैंक लोन लेगा नहीं एंड उस लोन से लेकर आपको लोन देगा नहीं, बैंक प्रॉफिट कहाँ से कमाएगा? करेक्ट। सो डेट इज नेवर अ सोर्स ऑफ फाइनेंसिंग फॉर बैंक्स। Debt is a raw material for banks. And that is why we never use ROCE for banks, because ROCE may we look at the return being provided to both the capital providers, both equity and debt holders. But ROE may we look just the return being provided to the equity holders only. Correct? That is also the reason कि हम price to book देखते हैं banks का, price to earning नहीं देखते. Right? That is also the thing. So price to book value ही हमें banks का देखना है. And ये book value को ही हम अगेंस्ट दी प्रोविजंस एडजस्ट कर सकते हैं, बिकॉज बुक वैल्यू बैंक की लोन है, कुछ लोन में डिफॉल्ट होगा, कुछ लोन बेकार होंगे, दैट बुक वैल्यू विल बी एडजस्टेड अगेंस्ट सम प्रोविजंस और कॉन्टिजेंसीज, दैट प्राइस टू अर्निंग विल नॉट रिफ्लेक्ट। करेक्ट। तो तभी दैट इज द रीजन द बुक वैल्यू ऑफ द बैंक इज सो इंपॉर्टेंट, एंड फॉर द केस ऑफ बैंक्स वी लुक एट द प्राइस टू बुक एंड नेवर प्राइस टू अर्निंग। ऑल्सो वन मोर थिंग आई विल से कि जब भी हम हैवी इंडस्ट्रियल कंपनीज की बात कर रहे हैं, राइट, प्राइस टू अर्निंग प्राइस टू बुक देख रहे हैं, ऑलवेज लुक दैट इन कंजंक्शन विद बुक टू बिल्ड। देयर इज अ रेशियो विच इज कॉल्ड एज बुक टू बिल्ड। एक बुक टू बिल्ड का रेशियो होता है। बुक टू बिल्ड ओनली हैवी इंडस्ट्रीज में ही यूज होता है, राइट। आईआईटी में भी टेंड टू कॉल इट एज अ डील टू विन रेशियो, इसके बाद में बात करेंगे। बुक टू बिल्ड, बुक इज उनके पास कितनी ऑर्डर बुक है, एंड बिल्ड वो कितना बना चुके हैं। बुक हाउ मच ऑर्डर्स दे हैव इन द पाइपलाइन विच इज येट टू बी मेड, एंड बिल्ड इज समथिंग लाइक विच दे हैव बिल्ड। सो फॉर एग्जाम्पल किसी भी डिफेंस कंपनीज को लाइक स्पेशल्स बनाने के ऑर्डर मिले हैं, तो उसे ऑर्डर जो मिले हैं ना वर्थ 2 करोड़ 200 करोड़ 300 करोड़ का, दैट्स द बुक, एंड बिल्ड इज समथिंग दैट दे हैव बिल्ड। So usually this ratio should be more than one. So this ratio what basically happens, right? And ये ratio more than one कब होगा, right? आपका जब build कम होगा and book आपकी बहुत ज्यादा होगी, right? So it means the order is in pipeline. The orders are in pipeline. So always for the industrial companies, cyclical companies, see this price to book value in conjunction with book to build always. अगर price to book low है and book to build very high है, it's very well good to go for such companies. So that is something we need to look in conjunction. Any questions, anybody? Any questions, anybody? Guys, here I'm trying to provide you the utmost value. ठीक है, कितना मैं प्रैक्टिकली आपको वैल्यू प्रोवाइड कर सकता हूँ। आगे के सेशंस में हम बात करेंगे, लाइक लाइक व्हेन वी गो लाइक मच मोर प्रैक्टिकल। ठीक है, कि लाइक फाइनेंशियल मॉडलिंग वैल्यूएशन में और रियलिस्टिक कंपनीज कैसे लाइक वी कैन अप्लाई दीज रेशियोज एंड डू दीज एनालिसिस, right? But the thing is, the value that I'm trying to provide you, the only thing is watch the sessions, watch the recordings, watch everything, watch live lectures to make yourself much more confident. And that's the only thing I can suggest you as of now. ठीक है, तो अगर कोई क्वेश्चन नहीं है तो आज का सेशन क्लोज करते हैं, राइट। थैंक यू सो मच फॉर योर टाइम एंड आई विल सी यू सून इन द सब्सिक्वेंट सेशन। थैंक यू सो मच। बाय बाय।